Good afternoon, good morning, good evening, everyone. It is 1:04 p.m. Eastern Standard Time on the 7th day of June, 2021. Happy Monday. As I was just starting this recording at the top of the hour, Cardano made a pretty big, quick jump down. If I look at the 5-minute chart, I know for some of you watching this, it's not that relevant by now, but really clear break of this trend line that extends from, I believe I drew it on the 4-hour chart. Yeah, from this, from the body of the candlesticks on the 4-hour chart, which I believe is the most appropriate way to draw trend lines on cryptocurrencies, is mostly using the bodies and not the wicks. So we have some evidence that we're going to like peel down south here. We have a pretty flat RSI at with a support level like at 43ish or so, and it doesn't look all that bullish from where we're at. We remain below. Okay, that orange line is the daily Kijun-sen level. So we remain below that. And actually, let's take a look at the daily chart. Get rid of the trend lines here. So this is the, I mean, if we unless something happens, which a lot can over the next 7 hours, a lot can happen over 7 hours. This would be the fourth consecutive day where we've had a close below the daily Kijun-sen. That's just flattened out quite a bit. I mean, it just continues to trade really flat, very, very hard area to remain above or below. The trend here continues to, we're continuing to consolidate. The lagging span, if you remember, we talked a lot about the lagging span and how price needs to remain above the candlesticks in order for us to remain bullish. And that, all last week I was saying Monday, today's the day where it's going to be the key test, because if Cardano doesn't close above the close of the candlestick that the lagging span is up against, we are looking at a high probability of some sliding prices. Now, the kind of upside to this is that today might be the day where we see the most pressure south for a bit, because what we could see is after today, if we do close below at like 155, then the range moves up higher too. So we could see Cardano flirt with sticking around that 190 area, and the lagging span could hug the lows of these candles before moving further south. So that's an important thing to pay attention to. We're trading in between the candlesticks right now. That's not a very good level to trade. In fact, it's similar to trading inside the cloud. These are conditions that I affectionately call a place where trading accounts go to die. So, yeah, I mean, one thing nice about the Ichimoku, there's a lot of things that are nice about the Ichimoku system, but the Ichimoku system does something not a lot of trading systems tell you. A lot of trading systems tell you when to take a trade, what to look for taking a trade. Ichimoku does that as well, but there's not a lot of systems that tell you when not to trade. And for the Ichimoku system, the times when you do not trade, the primary one is when price is inside the cloud. So whatever chart time frame you're trading on, if price is inside the cloud, then you just it's dead to you. You just better stay away from it. The other one, it's not really a rule in the system, but it's one that I follow, is that if the lagging span is in between the candlesticks, it's also one that I elect not to trade. I have some current positions open on it, some open shorts right now. I also have long positions. Excuse me. But otherwise, I would not be initiating any new positions today unless there was a clear close below at 155. Now, as we're moving forward into the week, we've got some really, really important levels to identify and pay attention to if we want to remain bullish. Because if price drops below the Tenkan-sen, that's one thing. That's generally not a huge deal. But the Senko Span B, which is the toughest area of support and resistance, I mean, let's see, what is it? Basically in 2 days, by Wednesday, we will have Senko Span A, the Tenkan-sen, and the Kijun-sen all on top of each other. that is the definition of a squeeze. I mean, that is a really, really, really compacted and congested trading condition. You don't really see that happen that often when you have, and the Tenkan-sen will be there too. So Tenkan-sen, Kijun-sen, Senko Span A, Senko Span B, everything's going to be on top of one another. That does not happen that often. And then you're going to see the lagging span below the candlesticks. I mean, if nothing else happens where it moves above or below the current candle it's against, by 8 o'clock tonight, when the Tuesday candlestick opens up, it will be trading below the candles by a good amount. And it will remain like that for the next 1, 2, 3, 4, 5 days at least. So the remainder of the week. So we're into some pretty interesting territory here because, yeah, there's a lot of danger zone for bulls here. Not so much. It's not so much for bears, but definitely for bulls, because there's every hour that we go on as we get closer to about Wednesday. Every hour we go, we're getting closer and closer to Cardano dropping out of support just by time alone, not through price action, but through time. Because on Wednesday, we could very well see it just drift sideways, and it will drop below all four of the primary lines: Tenkan-sen, Kijun-sen, Span A and B. I mean, that's something to pay attention to. I want to take a look at the point and figure chart though, because we get a little bit more kind of a look at just price action, especially when when markets are consolidating like this and they're getting all choppy and congested. It gets easy to get lost in the kind of minutia and forget to see what's happening with price action itself. So as we're looking at this, I'm just moving my stop into profit on my other screen there. I have a short on Tezos. I'm short on Tezos. I short triggered at 404. I'm short 2,500 Tezos right now. And I just moved my thing down. Anyways, this is an interesting looking chart for Cardano. So this is the 2-cent 3-box reversal chart. So if we get a triple bottom at 162 even, the short entry will be at 160 even. And that short entry, that short entry does two things. It's a break. Well, I call it a mini catapult because there's actually, no, hell. Well, yeah, we'll call it a mini catapult. Double bottom break. Here's that O. Didn't follow through. We retraced. And then if we get to 160, that's the short entry. And actually there's three things: break of a double bottom, entry on a mini catapult, and then the bullish trend line, the bull market trend line, will have broken that too. So there's a ton of really nice things here on the short side of the market, because our target then, at least on this point and figure chart, our vertical profit target would be down at 136. And I think of the volume profile, isn't that a zone of importance? I can't remember. 136. Yeah, it's right around it's within this high volume node here. It's just a little bit above this high volume node. So that makes sense. 136 makes perfect sense. We have on the weekly Kijun-sen is at 132, so it's not very far from 136. I think that's a good level to look at as far as how low would it go this week. I mean, could it just totally capitulate lower? Sure, but I expect to see a lot of support around that 131 to 136 value area. There is some support structure there. Weekly Kijun-sen and the high volume node, yeah, that's definitely going to prevent a lot of downside movement. Definitely see some people step in and possibly support it. We'll see. Oh man, this is 9 minutes long already. Ugh, that's way too long. I'll stop it there, but there's a lot more to go over tomorrow. But hope you all have a good rest of your day. From all of us here at Exchange Rates UK TV, thank you for watching. Please don't forget to like and subscribe.